What's up, Conscious Crypto? This is another entry in the DayTraders diary on the journey to funding. Now, even that statement alone is a little bit lenient because the way I want to pursue my trading is to trade with my own money. However, prop firms have provided an immaculate opportunity for those who have the skills of a successful trader to implement those skills with more money on the table. And the thing that tends to trip traders up is that they cannot execute with that much money on the table. Some though point to the alternative where actually having other people's money means you're not losing your own, therefore it's actually perchance easier on the psychology and therefore allows a trader to execute with ease. I found that a difficult dilemma because either way, when you're performing a prop fund challenge, you're still paying to complete that challenge. And you might, like I did on my first try, complete phase one. And that's all in the win because my Forex funds, got shut down and everybody's account got locked out. But I am still with the 200K account at FTMO. However, I found that this is the most interesting thing I want to speak to in this session, is that the amount of work that I've had outside of trading has completely distracted me from my ability to trade effectively. Now, really what allows me to trade effectively is simply showing up at the charts during the kill zone hours, the peak hours, the opening of New York, and for me, also the opening of Tokyo. So when Asia's live and when the US and Europe, London, is live, that's when I find the most liquidity and the best opportunity to place my trades. However, again, if right at 6 o'clock at night, my time, Tokyo opens, and I'm still trying to wrap up my workday and take care of loose ends for my consulting and coaching business, then I find that there's a lot less time to approach the charts. And if I am approaching the charts, perhaps my energy has not been in the right place to allow my mindset to execute, right? My mindset has been overwhelmed, or literally the trades that I've been seeing, I've been more willing to take on my account, my personal funded account, instead of risking this prop firm challenge and being like, I got to get it done now. I got to do this. I got to, I have a time limit. I don't have that time limit anymore. And that time limit or lack thereof has actually allowed me to be too laxed in my approach to trading. Now I have taken some trades and I've just let those work. I've let them work. I've let them work. I've let them work. And so in that regard, I am still on point with my execution as a swing trader that holds anywhere from a couple of days to 15 days and longer. It's been the trades that I've been taking have just not been panning out, or they go into profit. And then by the time that the market tells me to adjust my stop loss, the market is going to correct on that stop loss. Other aspects that I've seen right here with USD JPY is that something that's actually up is that I got a signal to go long, and I'm a contrarian, or at least a reversal trader. And so when I see the market that is this oversold with this much divergence, I actually want to go short. But USD JPY, right, dollar yen, is just an antithesis of that. It is like up only, up only, up only, buy the pullback, go long on the pullback. And if my computer would cooperate here, we get a better sense of what's going on. It slides off the chart. So I actually see another opportunity for me. I'm actually looking for shorts, and everything about this says long. However, my signal that fired off back here told me to go long, and that was a vector candle cross of the 50 with CPR squeeze in an uptrend. All right, and it just consolidated, and dropped, and wicked me out, and then made the next move up. And honestly, this is another signal, but I just wasn't there to take it. Taking care of my nieces this weekend, but also consulting with some major businesses where major management positions have stepped out, and I've had to take up additional responsibilities. What that has caused me to do is really reflect on this aspect of, do I want to be a full-time trader? Because it takes the most that a person has to offer. It truly does. It does. It just takes the ability to have off days and not feel obligated to trade on those off days, to have sick days and not feel like you're missing out on the market or the opportunity to make money. And what I've begun to implement in my mind is that I am needing to put in place an exit number. Now, in Billions, Taylor Mason, who works for Axe, talks about an exit number.
I think it'll be different now. I'm different. You are. We have a concrete goal in mind for you. So there'd be a defined exit. Then you could go do all the positive things that you're destined for. Won't be forever, but I think it'd be very, very good for everyone.
And moves that number up. It's like 100 million, moves it to 1 billion, moves it to 10 billion. And I find that there's an aspect that I've read in the Psychology of Money by Morgan House or something, that when is enough enough? When is enough enough? And for me, just improving my income, increasing it year over year is huge for me, and building and a foundation for the skill of trading and the skill of investing has yielded an opportunity for me to really, and this is a bad mindset, but to catch up on my 20s, right? In my 20s, I spent a bunch of time fucking off in addiction, losing my father, starting a business, getting deeper into addiction, getting deeper into debt. And then as I emerged out of my 20s into my 30s, I just started another business with that already. And there was just an aspect of drag force on me, drag force. So this past year, 2023, has been a big year of just paying off debt, and leaning into the guaranteed money makers, which normally, like if you look back at 2022, 2021, that was trading, that was investing. Now, I did my best day trading during bear markets, right? I saw the shorts and I took them. And now I'm switching my mentality to longs, and that's a really important thing to do. So if I had to clip anything, it's like once you get good at something, you have to recognize that if you're short biased because it's a bear market, but the market starts to turn and proves that it's turning, it's a good time to reassess your mindset, take a break, and start putting in the hours into looking for longs instead of shorts. So here, again, in dollar JPY, you get this flush out, big old red dildo, and you get divergence 1-2 on the hourly, but you get a nice little pin to the 800 EMA, and then it's off to the races, and it breaks all of this consolidation. It breaks all of that consolidation. And so to me, I really like the option right here in TradingView to actually do something called the inverse. So when you go into it, you can actually invert the scale, and you can start to train yourself to see longs as if you were seeing shorts. So when you invert the charts, when you're normally like, oh yeah, I for sure would have shorted here, for sure would have shorted here, you're actually, this is the market going up, and this is the market going up. And that's the mindset that is so critical. The mindset that has paid me money is when the retail trader is thinking, I'm going to miss out on this market, this move, it's going short, it's going short, it's going again, another bar, another huge drop. I could have made this money. I should have been in here. That's actually a time to pause and say, hey, the market will turn. Mean reversion is a freaking law in the markets. Wait. And then you can take the antithesis trade. However, if you're a continuation trader, more power to you. I'm still working on an edge or a strategy that is best for continuations. And it won't have anything to do with patterns, wedges, breakouts, retests, and things like that, because I find that they're not reliable enough for me. They don't have a high enough hit rate or accuracy for me to jump in. And also the opportunity for them is far and few between, right? You can find a pattern in anything, but like, is that pattern actually a descending triangle that is then being broken out of and then retested? Because if you're waiting for that retest may never come. You might get that opportunity once a month. You might get that opportunity once a year. And it just depends on the time frames you're working on. But obviously we all know that the higher the time frame, the higher the probability of the setup. So I've leaned into staying with checking the 5-day, the weekly, mainly the 5-day and the daily, and then saying, okay, what's happening here? And then going into the 4-hour. But the 4-hour feels like my bread and butter. And then again, I have a lot of strategies built into the 1-hour, but I execute on the 15-minute. And I've stopped trying to be perfect with my entries. I've stopped that again of trying to be perfect with my entries. And instead, I'm going back to what used to work, which is layering in. Now, I used to layer in with terrible risk management. And I'd be like, oh, well, it's still going, but my setup's still valid, and I just add to my position, losing position. And it yielded me huge gains because I was very confident in the setup and I was very confident in my probabilities. But now, under this new approach, risk management has stepped to the forefront, and risk management has really messed with my execution, and my execution relying on risk management and not losing too much before I start making money has actually made me realize that my entries are not as accurate and my patience could be improved. And I also need to figure out if I want to sit at the charts long enough, patiently enough to get the entry that I want, or if I can just place limit orders. Limit orders bring a lot of doubt into my mind. They bring a lot of different variables. Okay, now where's my stop loss? And how do I adjust for that? And if I get if it just double bottoms but goes a little bit lower, am I wicked out because I set my stop loss where the rest of retail did, and institutions and whales and market makers are just going to clip that and then move in the direction I wanted in the first place? So again, the reason I'm uploading too is it's been a while. I have some great content ready to be recorded, ready to be distributed. And with all the hubbub about the bull market coming and the Bitcoin ETF, this is like, it feels completely inappropriate for me to not be making content. It feels like a disservice to what I've been building and anyone who's been following. So apologies to anyone who's been following, but I also apologize to myself because, again, I am probably the one who watches the most of my content. I am the one who is writing the scripts, recording, and then editing, and then watching once I've actually posted, just to see like, hey, is this good content? So anyways, it's kind of an all around disappointment. And I want to step my game up, but I also acknowledge that I have a lot of responsibilities right now, and having the right bandwidth and the right mentality to take the trades I want to take is a lot to ask. It's a lot to ask myself. So I don't think I can be a scalper. I don't think, although there's a part of me considering that, coming from swing trading into scalping and saying, hey man, a lot of my trades go into profit pretty quickly. But because I'm a swing trader, it's not a ton of profit because my lot size is lower, right? My position size is smaller because I'm like waiting for bigger moves. I'm waiting for the swing move, not what happens in the next 15 minutes. And that to me has got me wondering, should I just hone in on day trading and set aside those hours and say, I am unavailable to anyone until these hours are up? Or do I stick with my swing trading and I allow my trades to work, paying little mind to them, and just getting my reps in on back testing and reiterating on my edges and improving them, as well as checking on my live trades and adjusting my stop loss and adjusting my take profit. So ultimately, man, I love this game, but I'm definitely feeling the weight after spending a whole weekend overnight babysitting my nieces, one toddler, one newborn. And I definitely feel like the drag force, which has me looking at the charts, but doesn't really have me eager to take a trade. So that's where I'm at. And I want to go look at Bitcoin for a minute, because this is the kind of trade that I was actually in, and I got out early, and I was just not patient with it. Ooh, make another move today. Boosh. And it's just, yeah, it feels like to me that this is actually going to continue. Because normally I'd see this railroad track consolidation, I'd see all this overextended push up, and I'd say, yeah, this is probably coming back down to reclaim some liquidity. But Bitcoin defies, crypto defies a lot of those norms, and can continue irrationally for quite a while and then correct harshly. And it's what makes trading it so fun. And for others, it's what makes it trading such a fucking nightmare. So, I'm going to stay with it, and I'm going to keep these updates coming, but I'm also going to keep that content. I'm going to get something out this week on one of the 4 videos I have great ideas and scripts written for, and I've had them written for weeks. But nonetheless, I got to keep this channel constant. I got to keep it because it's for me and it's for anyone else out there that is trying to come up, or anyone that's already leveled up, already established, and they just want to remember what it's like for a struggling up and coming trader, someone who just wants to pour themselves wholly into this business. And that includes coaching, and includes mentoring, includes accountability. So that's where I'm at for now. This is a humble entry into the Day Traders diary on the journey to funding. And just to keep you updated on funding, I'm down 6K on a 200K account. I've got plenty more room to go before I knock out that limit and my daily drawdown limit. But also, on the contrary side, I have $26,000 to make in order to pass the challenge. So that can be daunting as well. However, I know that one good trade will put me there. One good trade will get me as close as I need to be to finish it out. And that trade could have been Bitcoin. And I'll show this real quick because I counted the levels. I just got to show you guys this. I counted these levels. So we got an information up top. I'm going to hide these drawings because this can be just confusing for people. This is a volatility indicator. But this is a level here, and then it dropped level here, and you can see the retest. Just follow my line right across. It retested the base of that, so I know that's a level, and it dropped again, and I was waiting for a third level drop. Now there was support here, and it did drop. It took out all this liquidity, and then it shot back up, and I was like, on my own account, boom, I jumped in, took profit, the whole profit at the 800 EMA. And in reality, the normal trade for me is to let that sucker just boost, let it boost. And again, if I had done that with even 0.3%, 0.5, 0.3% of this funded account, I would have been there and calculated it. I would have had a $21,000 trade. It would have been monumental. Would have been great. Or it would have been up $21,000 on the 200K account. So this is where I'm at. This is what I'm dealing with. And I just want to share the love to anybody else out there that's in the struggle and trying to learn it. This is what we do. We live with loss. We live with less than, we find peace in the not less than enough, in the losses, and the idea of being inadequate or not doing enough or not making enough. And those are all things that have to be reconciled in order to play this game, or else they'll affect future trades, future execution, and most likely affect your personal life and other areas of your life. So once we reconcile all that and we reconstitute the whole by just recognizing, hey, we are already enough. From there, how could we want more when we already have it all?